Hope you're all well. This is a weekly review of the last week of January. Last week we had one win and one loss. Now it should have been 4 wins, and I'm going to explain why. This week was a perfect example of how trade execution and trade management is very important, because that's what dictates how much money you extract from the markets. The technicals usually always remain the same. We'll start off with GJ, the first zone being the 50 fib and also 61 of this move, plus key level. Now, it was a 250 pip move into the zone. We did see a reaction of this 50 fib, so I wanted something on top of technicals to improve the odds in my favor. Ideally, I wanted a breach of the 50 to increase the appeal of this, but knowing that GJ is a very tech-driven, very algo-driven pair, and also with UJ on this 50 fib, now this zone would have been way better to use for alignment, but because this 38 gave a very accurate reaction, the 50 was enough for me to consider GJ. Now it could have pushed deeper into the zone. This zone was around 50 pips away, and if GJ pushed around 50 more pips, it would have been this level, this 4-hour level, which we had already covered in our zone, and also EJ was approaching this 61 plus key level. Now this move down was driven by a risk-off sentiment, which was caused by the DeepSeek AI news, and because of that I cashed the full position at 50 pips. It did do the extended target, which was the 38 of the move down, but knowing that it could have carried on pushing lower, I just didn't want to take a loss on this. Now let's have a look at gold. So this was my plan for gold. The first zone we had was the 38 fib plus psychological level, and the one after that was the 50 fib plus key level. Now the 38 fib plus psych level, I wanted timing or alignment. We did get alignment with silver, but with a pullback which was around 100 pips, around 10-15 pips above the zone. I did cancel this trade and I did not see silver on level. So silver was on this 38 fib plus key level. The zone was only to be used for alignment, and it did align with gold. I didn't see it, so I missed out on a potential win. After that, we pushed deeper into the 50 fib plus key level. Now this zone I did require timing or alignment because of the pullback on the 38 fib, and we did get alignment. It was end of session, it was around 5 o'clock. It wasn't the best timing, but my thought process was that the volume is starting to die out. It shouldn't really push lower, but even if it does, the likelihood of the 27 level delivering were even higher, and that I didn't want to miss out on a potential move. Now my take profit one was based off the 23 fib, but since we did push deeper, the 23 fib realistically offered around 30 pips with around a 70-80 pip stop loss. I ended up closing this trade with stop loss at entry, and it delivered the big move. So again, another trade which I didn't capitalize on because of my own management. Finally, we had gold 2800 psychological level, and as explained in my breakdown, this was a split trade, 27.95 and 2800. Now there are two places where I went wrong in this trade. First one being not capitalizing on this move. So it did deliver a reaction from 27.95, but it missed our take profit by around 20 pips. This was also the break retest of all-time highs. Now I was a bit greedy wanting the break retest of this zone, which we did miss, just because it didn't fit my risk to reward, which you shouldn't do that. You don't take profit based on what you want, it's what the market realistically offers, and realistically I should have closed my position over here. Now it's very easy for me to say this zone did work and account it as a win, but the only way I would have taken 2800, so 2800 did deliver the move back to 27.95, but the only way I would have taken 2800 is if price pushed higher and it went straight to the 2800 and then it went back to 27.95. I would have closed the first trade, left a runner from the 2800, but we did see a reaction from 27.95 2 times, and then when it pushed higher, the 2800 didn't make sense. It offered me a third opportunity to get out of this trade, which again I didn't. Now I can say, oh, I was on door to door. At the end of the day, it's my own lack of planning which resulted in me taking a loss from a trade which should have been a win. Another reason why I did hold this position, even though it was end of a month where there's high likelihood of rebalancing of portfolios, the telltale signs were there not to take this trade, but I did expect there to be a lot of positions that would have been liquidated past all-time highs, and I didn't want to miss out on a potential bigger move down, and also with the fact that the 28.24 would have been a solid backup if all-time highs didn't deliver. So on gold this week, it was one loss where it should have been or could have been 3 wins.